How to do business valuations, part 2. In part 1, we talked about a 30,000 foot view concept of valuing businesses. And in this video, we're zooming in on more of a 10,000 foot view concept. Number 1, how to calculate SDE and EBITDA. Number 2, the cost of replication principle. Number 3, what's included in the sale. Number 4, does your brand and other intangible assets affect your valuation? Hi, I'm Nolan Baum, and I specialize in selling businesses for top dollar. In these videos, I pull back the curtain and give you guys the industry secrets, so let's dive into it. First off, all these rules are the same for everyone across the nation in every state and every industry with a few exceptions, and are universally accepted by bankers, sellers, buyers, and business brokers and everybody. But the side note is just because the rules are the same doesn't mean everyone follows the rules. Point number 1, the first step is calculating SDE and EBITDA, which are closely related. What we're actually doing is calculating the true operating profit. The concept of calculating the operating profit is about stripping away personal and discretionary and one-time sources of income and expenses so that we can get to the true operating profits. Buyers are looking at many different businesses to buy. They're not just looking at your business. So calculating the operating profit, SDE, and EBITDA are a way for buyers to compare apples to apples. They can just compare EBITDAs to EBITDAs. Here's an example. If you have a PPP loan or any other one-time sources of income that's not operating income, that would just be adjusted out. Or if you're renovating an office, and the next buyer would not be expected to have to re-renovate the office, so that might be considered a one-time expense, that would be adjusted out. After you add back the non-operating and one-time expenses, then add back interest expense, income tax expense, depreciation, and amortization, and you get EBITDA. Then just add back one owner's full-time salary, and you get SDE. That's a 10,000 foot view concept. Next, you need to take the SDE and or EBITDA and multiply it by 1 to 3.5x, depending on a bunch of factors. In general, multiples don't change too much over time, nor is it based on geography. Multiples are primarily dependent on the industry and size of the business. Now, how to choose the multiple is based on comparing sold businesses and many other factors. Choosing the multiple is very much an art. That's way beyond the scope of this 10,000 foot view concept video. But conceptually, the bigger the business, the higher the multiple. It's an issue of risk. Point number 2, besides comparing SDE and EBITDAs, buyers are calculating, number 1, how much would it cost them to replicate that target business from scratch? Number 2, they're also thinking about how much would it cost to simply just grow their existing business versus buying and try to grow by acquisition. For example, buyers that already own a pest control or pool cleaning business with recurring revenue, they're probably thinking, well, it cost me X amount to acquire a new customer, so I'm only willing to pay Y to acquire this other pest control business that has 200 accounts, for example. Here's another crucial point to remember. Point number 3. When businesses are valued using a multiple of SDE and or EBITDA, everything that it took to generate that business profit is included in the sales price. The trucks, equipment, inventory, employees, and all other tangible and intangible assets that would be required to keep producing that same profit moving forward would be included. All these items are all up for negotiation, but you get the point. Point number 4. Lastly, you'll notice that your business reputation, branding, how long you've been in business, your trade name or DBA, your Google reviews, and all other aspects of the business are not included in the baseline valuation. Buyers will argue that if your branding was so great, it would show up in the bottom line. If your business name was so valuable, it would show up in your bottom line. Profits are the point of truth or a point of reality, but of course you can make your arguments on why the multiple should be more or less depending on all these other aspects of your branding and stuff like that. Hopefully that gives you all the general concepts of how businesses are valued. Each business is unique. You can't apply the same multiple to every business. Business valuations are an art and a science. It takes math, and professional judgment. If you want to know what your business might be worth, just schedule on my calendar in the link in the description. If you found value in this video, definitely subscribe, and we'll see you on the next video.